Hi ladies and gentlemen, welcome to SA Accounting Academy. Here's a short clip on one of our previous webinars. I hope that you really do enjoy it.
Good day everyone, and welcome to this CPD learning activity hosted by SA Accounting Academy. Today's webinar deals with IFRS 15, revenue from contracts with customers, and the presenter is Anton van Wyk. Welcome again. Right, so again, welcome to this webinar. As we said, we're dealing with IFRS 15, revenue from contracts with customers, and quite a few pronouncements have actually been replaced or superseded by IFRS 15. So the agenda for today will be just to once again do a little overview or introduction to IFRS 15, then look at the scope and applicability of IFRS 15, because that is quite important to have a look at and make sure that the pronouncement is actually applicable. The important definitions that we need to understand, and I really do think that quite a few of the definitions, especially relating to what a promise is, what a performance obligation is, etc., provide important guidance for us to understand IFRS 15 in its entirety. And some of the definitions will obviously also be dealt with in some of the detailed steps that are contained within IFRS 15. Number 4, we're going to be looking at the 5-step revenue model that is prescribed by IFRS 15, which I'm quite excited about because I do believe that that actually gives quite a good structure to the revenue recognition process. So you'll see as we go through that. How do we then present revenue balances in the financial statements? And remember that presentation is on the face of the financial statements. And then how do we disclose revenue in the notes to the financial statements? So those will be the 6 agenda points that I hope to cover appropriately in the next 2 hours. All right, the standards that have been replaced by IFRS 15. IFRS 15 itself was issued in May 2014 and already became effective for periods beginning on or after 1 January 2017. So we are definitely now in a period where IFRS 15 is already applicable. 6 pronouncements have been superseded, and that was the old IAS 18 on revenue, IAS 11 on construction contracts, then the interpretations document number 13, customer loyalty programs, IFRIC 15, agreements for the construction of real estate, IFRIC 18, transfers of assets from customers, and then the SIC 31, which is also an interpretation, but the previous name of the interpretation document, SIC 31, revenue coming from barter transactions involving advertising services. So all of these documents have been absorbed into the new IFRS 15. All right, now the question should be asked, why a new standard for revenue recognition? And as you can see from the previous slide, a single model for revenue recognition is obviously ideal. So before, we had to consult various different documents and pronouncements and interpretations and all of those things just to make sure what the actual revenue recognition principles were. But now we have IFRS 15, and that is it. So all the answers that we seek are supposed to now be contained within one document, which is a good thing. The standard is principle-based, and this is what I personally enjoy the most about IFRS 15, is where, in my opinion, IAS 18 followed an approach of recognizing revenue by means of example. This standard follows the approach of identifying liabilities, and to the extent that you disprove a liability, you can then recognize revenue in its place, which I think is fantastic, because when looking at the conceptual framework, we all understand that the definitions of assets and liabilities are the important ones to focus on. They contain the most guidance, And then to the extent, if you think of assets, how do we prove an expense? We prove expenses by disproving assets. And now, in terms of IFRS 15, we prove revenue by disproving a liability. And I'm going to obviously link that a bit later in the webinar, so just have a look out for that. But I was actually recording a webinar the other day on the IFRS for SMEs, and the IFRS for SMEs has not been updated for these new principles of IFRS 15. And it was just, again, very evident how previously we tried to recognize revenue according to example. As I said, you had your categories of sale of goods, rendering of services, interest, royalties, dividends. And IS 18 almost tried to provide an example of every type of revenue that can exist or that can arise. Now, obviously, the way that these things are evolving, the types of transactions are evolving, the complexity of transactions is increasing. An approach that you want to recognize revenue by example is not going to work. And that is why I find IFRS 15 to be more principle based. And if the principle can then be applied and understood, then whatever type of transaction can arise must then be dealt with in terms of that principle. And that, in my opinion, makes IFRS 15 quite useful. A new 5-step model has been applied to all contracts with customers or developed for application to all these contracts. And I'm quite excited about that because when you present face-to-face CPD sessions and you take practitioners through the examples that you want to discuss with them, you can see in terms of the old approach, the IS 18, how people want to jump to certain steps. And that means that they overlook certain important steps in transactions. And if we now follow this 5-step model and really try and focus what is step 1, then 2, then 3 and 4 and 5 in that chronological order, it seems like those areas in revenue transactions that should be dealt with are not overlooked as easily. All right, so just a quick overview of what is in IFRS 15. There's an objective, as with all standards, then a scope discussion, and then the standard starts with the recognition of revenue. Now, the first part that's important is how to identify a contract, and you'll see that that is step 1. And then when do we look at individual contracts versus combination of contracts, and what would contract modifications, what would they represent and how they get dealt with? The next very important aspect is how to identify performance obligations. And that is what in our model is step 2. So what would be or what would constitute promises in contracts with customers? And then you'll see when we talk about step 2, when are goods or services distinct? Because distinct goods or services must be dealt with as separate promises. And then we focus on those promises and how they actually get satisfied. Then we talk about satisfaction of performance obligations. And you might wonder, why are we jumping to step 5? Because step 5 is actually a combination of recognition and measurement. So while we are dealing with recognition, we look at the satisfaction of performance obligations, those that are satisfied over time, those that are satisfied at a point in time. And then when we have performance obligations satisfied over time, how do we measure progress towards complete satisfaction of a performance obligation? So we'll have a look at all of these in the relevant steps that we're going to discuss. On the next slide, then we look at measurement of revenue transactions. And remember, determining the transaction price. Now we're back to step 3. And determining the transaction price, obviously, there are 4 main areas that have to be very carefully considered. Firstly, variable consideration. and then the existence of a significant financing component in the contract, what happens when we have non-cash consideration and consideration that is payable to a customer.
I hope that you enjoyed that video. For more of our webinar videos, go to www.accountingacademy.co.za. Thank you and have a lovely day.